Hi everyone, as you're starting to come into the room. As usual, we'll just give it a couple of minutes for everyone to join us. Cass, just double checking you can still see my screen.
Yes, I can, Rochelle.
It's lost its little green box that it usually has around it, which is confusing.
Oh, I hadn't noticed that, so hi everyone that's coming in.
We're expecting about, well, we had 270 registrants, 279 actually, for today. Now, some of those attendees will actually prefer to view the recording. So I'll wait until we sort of hit maybe the late hundreds before we kick off with the content. I hope everyone is keeping well throughout what we're experiencing, particularly in Victoria at the moment. To our Victorian friends, yeah, look, it's not fun, is it? And please know that I'm here if you need any support of any kind, personal or professional. Reach out, give me a call. You know, we can just say hi if that's all that's required. But very cognizant of the challenges that everyone's facing at the moment. So we're just seeing people, the numbers attending, coming into the room seem to have steadied off now. So given that it's a little bit past 2, we might get going. So again, welcome everybody. It's yours truly, Rochelle Park, CEO, and Cass Scott, inaugural member of the now Member Advisory Committee with the AAT after our transition into the IPA group. So you'll be receiving some more information on that aspect of your membership in the coming days and weeks, as I understand it. So you'll get some communication from the IPA. I had a couple of people asking about that. But that's not the topic of conversation for today. Of course, we're all getting excited about JobKeeper 2.0. So we're going to tell you what we do know, but you need to keep in mind, just keep in mind the journey that we had in March and April, that there was a lot of information that evolved over time, and this is going to be exactly the same. So we need to be patient with each other as legislation passes and information starts to formulate from Treasury and then flow through to the ATO in terms of how that's actually going to be administered and rolled out. And so when we think it's appropriate, we'll organise these sorts of conversations to give you the information that's needed, and also support that with EDM emails and so on, as we think we've got additional worthwhile information to share with you. So just a bit of housekeeping for those who haven't joined us online before. We'd like you to use the chat facility only if you've got general comments to make, like, hello, Cass is awesome, that sort of thing. If you've got questions around the technical side or specific in nature to the JobKeeper, then we ask you to do that via the Q&A. And to remind you, I'll show you where that is. Just there, click on, you'll see a toolbar, you'll click on the Q&A facility and you'll see that there. This enables us to capture the questions. So anything that we need to make note of after the event, we can refer back to these questions, whereas we have no record of those comments typed into the chat facility. So it's just to help us manage a little bit better. There's also better tools for clearing out questions via the Q&A facility. So that would be much appreciated if you could do that. I'm just going to start with a general bit of commentary around what the ATO is telling us at the various forums at the moment, both from an administrative perspective, but how we're evolving with JobKeeper 2.0. And one of the messages they're pretty keen for us to share with you at the moment is that they are very well aware of the amount of stress and the volume of work that both tax professionals and small businesses separately and jointly faced over the introduction of the JobKeeper legislation. So they're incredibly well aware that there were honest mistakes that were made throughout that process. They're also very well aware that there were people who've made deliberate and misleading statements, that have falsified employee-employer relationships, that haven't applied the rules correctly in quite a deliberate and calculated way. And the two ways that they're going to deal with those situations are very, very different. Where they find that a mistake that's happened is honest after their investigations into the matter, they will not require repayment in many of those circumstances. Where they find that those overpayments have been made because of deliberately misleading and falsified statements, then there will be not only repayments required, but also penalties applied under the powers that they've got. So essentially the messaging is, if you've got clients where you know either they or you or a collection of the pair of you have made errors throughout the course of the JobKeeper payments, then they're asking that you reach out to the ATO, and they will work through those issues. And in many instances where they are honest errors, as I said, there'll be no repayment required. Obviously, with the recalcitrant-ish cases, then we'll have repayment required, and also possible penalties applied. So just as a professional, just be careful of your obligations around that, and be very proactive about reaching out where you find there are errors and issues, even if you haven't been involved in those. Oh, sorry, I should say that's the reason I've got that slide up, is you can see that on the ATO website, and I will share this slide deck when I share the recording of it in the next day or two. So you can follow that link there, or Cass can copy it over if it's possible into the chat facility. That there is a page that talks to all of that, and how you can connect with the ATO if you do discover that overpayments have been made for JobKeeper purposes. Also, I found this website extremely helpful, and we're going to probably again over the coming weeks. This page is where the ATO are giving us journals of what information has been updated on their website. So we found at the beginning of all of this, I'm sure we all did, that information was being updated literally on an hour-by-hour basis, and it was really hard to keep track of whether or not we had just read the latest information. So this page here, as you can see there, gives you, you can see 31 July, it's telling you what's new and what's changed on the website. So a really good reference point for us all to keep in mind. Also, I had an example this morning actually of a member asking me how to handle something that was client specific, and it was a reasonably complex situation in relation to these clients' affairs. Where you've got a case like that, now I would urge you to call the normal numbers first to explore whether or not via the normal processes you can seek a resolution to any particular question or issue that a client has. But where an issue is a little bit more complex, for example, I think in this case, there were unusual business circumstances facing this particular business in the comparable period last year, i.e. there were renovations being taken place during the December quarter, I think it was. And therefore, a turnover test is not really going to be a fair look at whether or not the COVID situation has impacted this client's dealings year on year. So that would represent a situation where you'd want to have a special conversation with the ATO team, and via this website here, there's a form that you can download that will kick off that conversation with the complex resolutions team. If you're confused about that process, or you're having issues in reaching a resolution, that's when we would come in. You could reach out to me, and I can talk to the connections that we have with the ATO via the BASAG group and also the TPSG. So yeah, but just know that that service is there where you've got complex issues. A lot of the time you'll come to AAT to talk to us about them, but obviously in many of these circumstances, you'll actually need that information confirmed by the ATO about your client's individual circumstances. Okay, so just some of the basic facts as I've read them to date. Last week's meeting, thank you all for your patience in the postponement of this meeting from last week till now. There was some, some good information shared, including some of the stuff that I've just talked about, but also the ATO have indicated that because there's more time available to them in this wave of JobKeeper change, that wherever possible, they will be working with existing technology providers to remove as much of the manual processing as they can. So you know how we've got two different pay levels, and we're going through that in a moment, the 20 and plus hours per week, and then the less than at the different payment amounts. As one example, that may be a payroll category set up in the software for you. So you're not actually having to set that up and make those decisions yourself, and the amounts will be automatically populating and the top ups happening and so on. So the ATO have said wherever possible, they will be working closely with the softwares to try and arrange that compliance, which ideally does happen. And I mean, I'm sure you know that those who aren't tax professionals, we wonder how many honest errors there are out there, because we were struggling to apply all of these changes. So, our friends, small business colleagues who are working without that advice would have found it extremely difficult. So that's potentially a good outcome. We'll see where that lands. So JobKeeper, as in its current format, will maintain until the 27th of September 2020, when we'll move into JobKeeper 2.0. That will flow through in a couple of different formats right through to the 28th of March 2021 at this stage. And what that means is, as I said, there's two categories. If you've got employees who've worked 20 or more hours from the 28th of September through till the 3rd of January, they'll receive a JobKeeper amount of $1,200 per fortnight. From the 4th of January through to the 28th of March, they'll receive $1,000 per fortnight. So that's for the 20 and plus hours. All other employees on hours lower than that, for the first period from 28 September to 3 Jan, will receive the $750 per fortnight, and $650 per fortnight thereafter. So obviously you need to inform your clients of those changes in thresholds, but all of the same mechanisms are in place, i.e. the top-up payments must happen and so on. All JobKeeper version 1 eligibility criteria remain in place. And for that 20 or more hours, what we're seeing now is that they're saying that in the 4 weeks prior to the 1st of March, eligible employees must have worked an average of those 20 hours or more. And I think, so that means that from the 3rd of February to 1 March 2020 is the period that will be averaging out those wages to ascertain whether they've worked 20 or more hours. Apprentices and trainees who are in employment from the 1st of July 2020 will have a wage subsidy of 50% of their wages paid until 31 March 2021. And that's in addition to existing support for business with 199 or fewer workers that are now eligible for the subsidy wages from 1 July to 31 March. Eligible business participants continue to be eligible for those sole traders, partner in a partnership, a beneficiary of a trust, a shareholder or a company director. And the same rules apply in terms of the 20 and plus or fewer than, or 19 and fewer hours. So we apply that same test, and those employees must be actively engaged in the business for that amount of hours for them to be eligible for the new JobKeeper 2.0 provisions. There's no change in the decline in turnover percentage provisions across the different business types. So what we're seeing now, and this is something that we're seeking further clarification on. There's nothing we can do about this until we hear more clarification from Treasury, but essentially the decline is using the GST turnover. But we now, with JobKeeper 1, once we're in, but now we're having to measure against both June and September quarters. And then for the March quarter, it'll be June, September and December. So that's a difference there. Yeah, so there's in the March quarter, that'll actually be the 3 quarters. So Cass, did you have anything that you wanted to add around GST turnover here?
Yeah, so I think one of the big points of discussion, and this is one of the elements that still needs to be clearly clarified, is what is being defined as GST turnover. So there was certainly a definition around GST turnover which came out with JobKeeper 1.0, and I've just posted the link to turnover for JobKeeper payments into the chat box there. There is still currently ambiguity around what exactly GST turnover is. Now, I've seen some questions come through, does it exclude GST-free supplies? It doesn't. When we talk about GST turnover, GST turnover is a specific definition under the GST Act. It doesn't necessarily relate directly to turnover or sales or revenue that has GST in it. So it's important to understand that when we talk GST turnover, it can be all turnover for the business, irrespective of whether it has GST or excludes GST. So if you've got a business that's a fruit and veg shop, for instance, most of their turnover would be from GST-free supplies, but that is still deemed to be GST turnover. So the question will be, and this is one of the things that we're still waiting to be clarified by Treasury and the ATO once the information's released, is exactly what and how are they defining GST turnover for JobKeeper 2.0 purposes. An extension to that conversation too is particularly for those businesses that might choose to try and delay or defer invoicing. Firstly, that would be deemed to be a scheme from the ATO's perspective. But sometimes businesses delay invoicing between periods for other reasons, and it's whether turnover is actually going to be defined in the services having been provided in a particular period, as opposed to the invoices having been raised in a particular period if we're talking about an accruals basis, or paid in a particular period for a cash basis. So one of the things that I would say you need to keep an eye on at the moment is the clarification around what GST turnover is, and once there is further information from Treasury and the ATO around that, then we will get that information out to all of the membership base. So I hope that helps with turnover.
That's great, Cass. That's actually the end of the slide decks as I had it. Eric emailed me before this preso today just to say we should remind people that that's actually 3 JobKeeper fortnights to consider in August, so in our current month. So just a reminder about that you'll need to make sure you've covered off on the top-ups as appropriate over the 3 fortnights in this month.
Yep, great. That's probably it for me on turnover, Rochelle.
Okay, so maybe we go into some of the questions that we can answer.
Yep.
I'll start from the top and work down. What should I do for a normal full-time employee who in August is going to 1 day per week while completing uni, but will go back to full-time in December? Well, at this stage, I think the information Tristan is telling us that the test is actually from 20 hours or more in the 4 weeks prior to 1 March is what I've been reading. Is that your understanding, Cass?
Yeah, that's absolutely the understanding. I think one of the interesting things to extend a little bit, Rochelle, about JobKeeper 2.0 is a lot of the testing of eligibility of employees, eligibility of employers, and continued eligibility of employers is from events that have actually already occurred. So everything is actually going to be based on actuals rather than projected, which is the key difference between the two JobKeeper iterations that we're looking at now. So the employee test is based on the hours in the 4 weeks prior to the 1st of March. So, you know, if you've got a casual employee, a permanent part-time employee, you'll be averaging their hours out over that 4-week period, and they will either exceed 20 hours per week or they will be under 20 hours per week, and that's what's actually going to determine the level of payment that they will be eligible for, assuming the business is still an eligible employer.
Eric's asking, with the average hour test, would we include leave without pay? That's one I'd like to see clarification on, but I would think probably no, but I don't know. That's a good example of one we need to take offline.
Yeah, I'd certainly agree with that too, Rochelle. I think leave without pay is still quite ambiguous. And there was certainly a question asked earlier about anybody that's on paid annual leave or personal care leave. So in any other business activity, paid annual leave and paid personal carers leave are actually considered to be ordinary times and considered to be work hours. So the expectation would be that those hours would be used for the average of hours for the employee.
And Lucy here, what about payments to EBPs? I think we've covered that, that they still need to assess their hours worked around eligibility. Bruce, how many hours in Feb 2020 for eligible business participants? Same rules there, Bruce. It's 20 plus for the full amount, or for the reduced amount, less than. What have we got? Nikki, how is a trainee to be assessed in an industry which doesn't have formal TAFE training?
So Nikki, I'm assuming you're actually asking that question in the context of apprentices and trainees. Apprentices and trainees subsidies were always directly linked to formal training or apprenticeship agreements. So if you've got somebody that's working in the business who doesn't have a formal agreement around their traineeship, then they would be excluded from eligibility for wage apprentice or trainee and apprentice subsidies.
Thanks, Cass. So I think we've covered off on that one, Charles. Just the same amounts. Again, just reiterating, you've got to apply that hours test to decide which level they would be paid at.
Mm-hmm. One of the things to make really, really clear to your clients and the employer base is if the employer is currently eligible for JobKeeper, the current JobKeeper 1.0, nothing is actually going to change there. The same process that we've been dealing with for the last couple of months. There's not going to be any retest on the existing JobKeeper scheme. It's for JobKeeper 2.0 that there will be the new tests in place based on actual turnover compared to same turnover last year for the June quarters and the September quarters. One of the things that, you know, with some businesses, and we were talking about turnover a moment ago, some businesses it's very, very clear what their turnover is, and it's directly articulated through the activity statements that are lodged for those periods. Unless you've got any expectation you know, alternative testing, or there's something unusual about the business, you can potentially start now, as you're completing the June activity statements for those businesses, start to give them a heads up about whether or not they would be eligible for JobKeeper 2.0. So obviously there are a number of businesses who started to you know, regenerate their business and their revenue base in the June quarter, consequence of restrictions being lifted, who may now not meet the 30% decline in turnover. If those businesses don't meet it for June, then there is actually no further testing that's required. They're going to be ineligible for JobKeeper 2.0.
So Shields has asked there, does anyone know if they will change the date of the 1st of March 29 for casual employees to receive JobKeeper? I haven't heard anything along those lines, Shields, that's changing certainly in the main announcement, there wasn't anything mentioned around that. Have you heard any differently, Cass?
No, I'm with you on that one, Rochelle. At this stage, the dates that were applicable for the JobKeeper 1.0 will still be the dates that are applicable for JobKeeper 2.0.
Excellent. So Simone's asked, will there still be alternative turnover tests? I have a client who is project-based. Yes, my understanding is the turnover tests will still have their alternatives. An example of that is, you know, the complex resolutions page I shared, where you've got unique circumstances that you would like the ATO to consider. That's perhaps where you pick up on that service as a practitioner to ask those questions about your client's individual circumstances that aren't in the catch-all.
Mm. And so one of the things that does actually mean too is that businesses that may not, for whatever reason, have been eligible for JobKeeper 1.0 may become eligible for JobKeeper 2.0 once they do the actual test on their June turnover. So because a business isn't in receipt of JobKeeper 1.0 at the moment, doesn't necessarily preclude them from becoming eligible for 2.0, and it may be as a consequence of some of the alternative tests. And again, that's one of the things that we're waiting on clarification through Treasury and the ATO. So there's been nothing promulgated at this point in time about what may constitute the alternative testing for JobKeeper 2.0.
So Anonymous has asked, will employees who were left out because they have not been employed for 12 months in March 2020 now be eligible for JobKeeper 2? We've heard no indications that that would be the case, Anonymous. So I wouldn't think so, but you know, we might have to wait for detail to come out in that. Certainly nothing announced to that effect to date.
There is always the potential that the changing situation currently in Victoria particularly, and potentially New South Wales, may trigger a revisit on that, but you know, you guys will know as much about that as we do at the moment.
Does the GST turnover include JobKeeper payments received? The JobKeeper payments is a subsidy, so does not constitute part of GST turnover.
Correct, yeah.
Anonymous, my client wasn't eligible for one. Now, however, his business income has dropped substantially. That's what Cass was just addressing before there, Anonymous. That yes, that the statements to date have said that people who are out of the system may well become eligible with the system moving forward. So that is absolutely a possibility.
Yeah. Just in addition to the question there around not currently receiving JobKeeper 1 may be eligible for JobKeeper 2, the same eligibility dates for employee participation will need to be met. So even now, if the business is only finding out they're eligible for JobKeeper 2 or may potentially be eligible for JobKeeper 2, the test dates for the employees will still be back to the 1st of March. So, you know, needed to be employed as a casual more than 12 months as at the 1st of March, or a full or part-time employee as at that date, with the other employee conditions that were applicable as well.
So another anonymous attendees, if a restaurant which does not want to do takeaway simply closes the business doors and reports zero GST turnover, will that pass the turnover test? Well, yes.
The first part of the test will actually be the assessment of the June quarter, and really June quarter is based on actual figures, and then it will also be based on actual figures in the September quarter. So if you've got a business that for the June quarter doesn't meet the 30% reduction, then testing in the September quarter is irrelevant, even if they did close the doors and report nil turnover for that period, because they've not met the 30th of June's turnover test. So remember, with this, it's not June or September, it's June plus September. And then for the second part of JobKeeper 2.0, it will be June plus December plus March. June plus September plus December to determine the next tranche of it. So, you know, they are working on actuals at the moment, not projections.
So Cass, that's a good segue into Edward's question here. Do you want to continue?
A business who doesn't qualify in June quarter then because of lockdown goes more than 30% in September. The average of the two may be more than 30%. Look, Ed, at this stage, there's been nothing to indicate that there'll be an average across the two periods. I can certainly understand where your question's coming from there, particularly with what's been happening in Victoria and, you know, potentially New South Wales. But as it stands at the moment, it will be each quarter assessed individually. And if June is not meeting the turnover, then they're ineligible for JobKeeper 2.0. There is a possibility that may be one of the alternative tests, but at this stage we don't know what they look like.
Does a one-off sale of an asset include GST? Where it's a going concern, it is GST turnover. What happens if your GST turnover in September quarter is 30% less than September last year, but more than June quarter in 2019? Did you mean 2020? I'm not sure.
So you'll be comparing June 2020 with June 2019, and you'll be comparing September 2020 with September 19. So if June 2020 is 30% less than June 19, that's the first tick. And then if September 2020 is 30% less than September 2019, that's the second tick. So it's actually not comparing September 20 to June 20, it's comparing it the 12 months prior.
Anonymous has said that if a mistake was made, then there's no need to report. Well, that's contrary to the advice that I've received from the ATOs. So what I'll do is take that one offline also and provide further clarification on that. As I said, I spoke to Sylvia this morning, and she indicated that if you've got a mistake, approach the ATO so that they can assess whether they believe it's an honest mistake and, you know, have it officially acknowledged. So, you know, there may be information on the website. Perhaps share that with me so I've got something to go back to the ATO with, if that's okay, Anonymous.
Elizabeth's asking the same question again about turnover. It's period by period, not an aggregate of periods. So it's not an average of the two periods. Nicole's saying we've got an employee who's currently receiving JobKeeper. She's due to go on maternity leave in late November. She's no longer eligible once maternity leave commences. If she's in receipt of paid maternity leave or parental leave, then she will not be able to receive JobKeeper for the period. That's not to say that she's no longer eligible, because if paid maternity leave or paid parental leave ceases, she would still be eligible for JobKeeper payments once the paid parental leave has finished. It's just she just doesn't get paid JobKeeper in receipt of those other entitlements.
So Terry, yep, we've already covered that if businesses don't qualify initially but do eventually, that the system is open for them jumping in.
Just going back on that comment, Terry, just to make sure it's fully qualified, if they're not, if you're talking about the June quarter and they're failing, not eligible or not reaching the 30% decline, and if they're talking about September and they're not reaching the 30% decline, if they look at November and November compared to last year is the 30% decline, they won't be eligible, because the measure is actually the June quarter plus the September quarter plus the December quarter. It's not, you know, it's not something, the current JobKeeper allows eligible or businesses to become eligible at any point within the JobKeeper fortnights. The new iteration, JobKeeper 2.0, if you're not in, there's not a second bite at the cherry further down the track.
Can I ask you to get the Eleanor one there, Cass?
Yep. Staff members still on maternity leave and getting JobKeeper but didn't work any hours prior to the 1st of the 3rd as they were on maternity leave. Again, the expectation being on approved maternity leave is the same as being on approved annual leave and approved personal carers leave, that would be considered as part of the hours for testing the JobKeeper 2.0. The only one there I think that's a bit ambiguous at the moment is leave without pay. Businesses based in Victoria. I have some that rebounded in June and for the June quarter were not down by more than 30%. Yeah, look, Jan, I think that's an interesting question. As it currently stands, there's been no advice that Victoria is going to be segmented out in any way and have any different testing or treatment applied to it. So currently they are not down by 30% in the June quarter. It's expected that they will be ineligible. However, with everything that's happening, it may be a changing perspective on it. And once again, I do wonder, we've not heard a great deal come out of Treasury probably for the last 2-3 weeks. And there is always the possibility, and it's purely speculative, whether Treasury is sitting at actually looking at what is happening in Victoria at the moment and making some decisions around that. So as it stands with the information that's been released, Victoria won't be treated any differently than any other state. However, what is decided from this point moving forward is unknown.
Yeah, and just further to that, I have heard some sort of political commentary around the fact that 25% of JobKeeper participants are Victorian businesses, indicating that 25% of businesses impacted by this are in Victoria. So, as Cass said, we can't be preemptive, but that political commentary is quite suggestive that Canberra is incredibly aware of the impact that stage 4 will have on the Australian economy in Victoria.
Chris is asking, do we have to opt out and then opt back in for dad and partner pay? So if you've got an employee who is in receipt of dad and partner pay, I don't think you necessarily opt out and opt in. You just don't pay them for the periods they're in receipt of dad and partner pay. You don't claim the JobKeeper top-up. You don't need to pay them the JobKeeper top-up for those periods. Desley is asking, if a director of a company is an employee and is actively working in the company for the 20 hours plus, when processing pays, do we have to put wages as 20 hours in the balance to JobKeeper top-up, or can it all still go to JobKeeper top-up? So the 20-hour test is for the 4 weeks prior to the 1st of March, not for the period in which the JobKeeper payment or the JobKeeper top-up will be paid. So if they're not working any hours in that period where JobKeeper is being paid, then it would all be topped up. There's no ordinary hours. Earl's asking, do we use a monthly comparison as well as a quarterly in JobKeeper 1? Earl, at this point in time, all of the information is that the comparisons will be on the June quarter, September quarter, and the December quarter. Unaware at this stage if there would be anything based monthly as part of the testing regime, so we don't know at the moment. Linda's asking if we're using an average of actual hours worked for the month that we're required to top up after the end of month, as this could vary the 20 or the 20 plus hours. So the test of 20 hours determines this is tested on the 4 weeks prior to the 1st of March 2020. So you'll be looking at how many hours each employee worked for the 4 weeks, average over the 4 weeks prior to that date. If they worked more than 20 hours, then their JobKeeper top-up would be to the level of $1,200. So the process for topping up won't change. You would top up to a maximum of $1,200 if they were working more than 20 hours back in March, irrespective of how many hours they're working now. And similarly, if they were working less than 20 hours for the 4-week period back in March, you would only top up to the ceiling of $750, irrespective of how many hours they're working now. So hopefully, Linda, that's qualified that for you.
I'd like to think, Janet, they might need to diarise their work commitments during that 4-week period prior to 1 March. Anything to add to that, Cass?
No, I think that's pretty much covered it. You'd need to be able to substantiate it if the ATO comes knocking on the door.
Kim, if a client was not eligible until July for JobKeeper 1, does JobKeeper 2 eligibility still include June quarter, or does it apply straight till September quarter? Well, for December quarter, they've got to satisfy June and September.
So we need to remember with JobKeeper 2, payments for JobKeeper 2 are coming after JobKeeper 1. So JobKeeper 1 finalises itself basically at the end of the September quarter. So the quarter that we're talking about where JobKeeper 2 is going to be paid is in the December quarter, and the test for that will be on the June quarter and the September quarter. So just remember dates and map it out with your dates, that if somebody is not eligible in July, they're going to still be paid for July and August and September under JobKeeper 1. What we're looking at from JobKeeper 2 is what's happening after JobKeeper 1's finished, and that's the December quarter. So they'll be applying the test on July and September to determine what is being paid in the December quarter. Julia's asking, will we report GST turnover on accruals or cash basis, or will it be the same method you use in JobKeeper 1, or same as BAS reporting? So at this stage, indications are it will be very similar to what's in JobKeeper 1, but one of the things that we're looking at clarification on is how they're formally defining GST turnover for JobKeeper 2 purposes. So that's a question that will still have a lot of discussion around it. Is an employee on unpaid maternity leave still eligible for JobKeeper? Yes, I believe they are. It's only paid parental leave that excludes them from JobKeeper. Is JobKeeper excluded from income tax calculations for a business? Jennifer, JobKeeper is going to be assessable income for a business for income tax calculations. Your client accountants should be aware of that, and JobKeeper subsidies should be clearly identifiable within the chart of accounts and the profit and loss statement. So the recommendation is to record it on a separate line. We call it COVID-19 JobKeeper subsidy, other income, but yes, it will be included for income tax calculations. If turnover has increased by 100% in September quarter and a business doesn't meet the eligibility for JobKeeper, however, in December quarter, the turnover decreased by 70%. Can the business then apply for JobKeeper? No, Jessie. If a business can't demonstrate a reduction in turnover for the June quarter or the September quarter, then they're out. There's no second bite at the cherry, even if their turnover decreases below the 30% threshold for the December quarter. It's June plus September plus December. Charles is asking, how would you do the turnover test for annual GST lodges? Again, probably looking for qualification around that as part of the discussion on what's constituting GST turnover. So that might be a question worth flagging, Rochelle, is specifically for annual GST. Simone's asking what happens when a business changes from cash GST to accrual. You'll find if you have a look at the definitions for GST turnover at the moment, they are generally an accruals-based definition. So cash is a reporting method, not a turnover definition. As an example, we had a client who was a cash activity statement and had not reported any turnover on their activity statements prior to the 12th of March, which was the original drop-off. Their first activity statement to report any sales was the March quarter, and initially the ATO deemed them not to be eligible for JobKeeper. We went back to the ATO and we were able to clearly demonstrate that they actually received turnover or had GST defined turnover in their business in the November and December quarters, and had they been lodging their activity statements on an accruals basis, they would have lodged sales in the December quarter and would have immediately been eligible for JobKeeper. So cash is really, a cash reporting is really just a timing difference. It's not when the turnover's occurred, it's actually when the payment for that has been received. So what I would suggest, if you've got any clients who are on a cash basis, consider their accruals perspective, because that is likely to be more reflective of what actual GST turnover is. Okay, sorry, there was just one that jumped down there, Rochelle. Sorry, if you have incorrectly included JobKeeper in the turnover, should we advise the ATO? Debbie, I'm assuming you're talking about the projected or the actual and projected reporting that's happening on a monthly basis. If you've not reported that correctly, then yes, I would be going back and advising the ATO, because whatever results they have in their system may form part of the algorithms that they use to assess whether they need to ask a business any substantiation type questions. Deborah is saying, even if June 2020 does not qualify, it is irrelevant whether September 2020 would qualify. Deb, based on the information that's out at the moment, that's absolutely correct. It's a June plus September, not June or September qualification. It's an and, not an or. So, yep, you're absolutely right. Under JobKeeper 1, the top must be paid within each JobKeeper fortnight. Will that still apply under JobKeeper 2? Employees may not know until mid-October after the first JobKeeper fortnight whether they will be eligible. That's actually a great question, Anonymous, and I have to admit I've not actually seen anything about when top-ups are occurring. Rochelle, are you able to provide insights on that one?
No, Cass, so another good one to take on notice, I think.
Yeah, there's something's telling me that there might be a subtle change in that due to the timing, because it'll be once you're in for JobKeeper 2.0, you will remain in, and I'm not sure about the monthly reporting. So great question, and we'll follow that one up and get back to you. Can you join JobKeeper at any point after June 2020? Absolutely, Deb. JobKeeper 1.0 is still available to businesses that meet the eligibility criteria right up until the final fortnight. So yes. Your client is a sole trader and no employees. Would he be able to claim the $1,200? Earl, if your client meets the requirements of an eligible business participant, then yes, he would be eligible for the JobKeeper 2.0. So have a look at the criteria for eligible business participant. If business qualifies in June quarter but not September due to selling a going concern asset, will they re-qualify in December if under the 30%? If they failed the September test, then no, December's review won't re-qualify them. Tracy's saying, are you saying if you aren't eligible in June and then become eligible in September, that you need to be eligible in June for JobKeeper 2? So yes, that's everything that's out at the moment is indicating that to be eligible from 28th of September 2020 to 3rd of January, measure decline using actual GST turnover in both the June and September 2020 quarters to 3rd January relative to the comparable 2019 quarters. So it is an and test, it's not an or test. The GST turnover report for JobKeeper was based on accrual. There was an option to report accrual or cash. However, client is on a cash basis. Should I change the reporting of turnover to cash basis for JobKeeper 2.0? At this stage, you don't need and shouldn't need to change any reporting mechanisms. It will all come down to the definition of GST turnover. So I think we've hashed that over quite a bit, and once we get more clarification around GST turnover and measuring those, more information will be provided. If a business ceases to operate, I'm presuming they can't keep claiming JobKeeper prior to September 2020. That would be correct. If a business is in an operation, they would no longer meet the eligibility requirements. If a sole trader takes a wage as an employee, can they choose whether they claim as an employee or a business participant? So Anonymous, I'm assuming that you're talking about a sole trader who is employed as an employee within the entity. Again, that will come back to the original JobKeeper 1.0 eligibility criteria for EBPs or employees, in that if they have another permanent or part-time position, they will be ineligible to claim as an eligible business participant. If they are working casually with another entity, then they would still potentially be eligible as a sole trader eligible business participant. Greta's saying when setting up JobKeeper 1, you could decide which month quarter you wanted to use for eligibility. I've been checking one client for the June quarter, they were over the 30%, but they decided to just use March, which they were way below. Greta, I'm not quite sure what your question is there, so if you can expand on that and actually ask the question, that seems to be more of a statement, that would be great. Can an employee defer their start date for government PPL to claim JobKeeper and then reapply for PPL at a later date? Nicole, there are certain criteria and requirements around claiming PPL. You can't actually adjust those just to try and claim JobKeeper. That would be deemed to be a scheme, and I wouldn't want to be answering questions to the ATO on that one. Gillian, if someone was on PPL in February, do you use their normal hours for the 4-week period to March to make them eligible for JobKeeper, assuming this business is eligible? If they were on paid parental leave in February, that paid parental leave would generally be, I would say based on your ordinary hours. That may be one of the questions that comes up through the alternative and clarifications. So I know we've talked about annual leave, I know we've talked about personal carers leave and unpaid or maternity leave, but it might be worth double checking on PPL how they're determining those hours. Rochelle, I think if...
Yep, noted.
Yeah, I think it's probably a good question to ask. What about the cash boost? I believe this is not assessable. Can you confirm? Lucy, that's correct. Cash flow boost is not assessable income, and it's actually not deemed reportable for JobKeeper sales purposes either. Beck's saying if a client is currently not entitled to JobKeeper, they work seasonally in Victoria from September and their turnover greatly declines. Beck, that may be one of the alternative tests and or additional turnover tests that may be considered. So at this stage, I don't have clarity around seasonal workers and how the turnover related to them is going to change with JobKeeper 2.0.
And this might be a good example of where that complex resolutions team kicks into individual circumstances.
Yeah, absolutely. Eliza's asking, clients in the tourism industry that have paid staff under a salary basis and not hours, but have of course had less hours working, how do you suggest that I get them to report this going forward? Okay, so Eliza, when we're talking about a salary-based employee, their employment contract would still stipulate what their ordinary hours of work are for the period of that contract. Under JobKeeper as it stands at the moment, those hours in February, well, JobKeeper wasn't in place in February and hours weren't in place in February, and JobKeeper stand downs weren't in place in February. So the test is on the hours that they would have been working in February, or the 4 weeks prior to the 1st of March, which is February. I'm not quite sure why they've worded it that way. So I'm not quite sure that, you know, how many hours they're working now is actually going to be relevant to whether or not they're eligible for JobKeeper 2.0 and the level of payment, because it will all be based on the 4 weeks prior to the 1st of March. Chris is saying that other associations are saying strictly based on method of lodgement of BAS. Look, Chris, I can't speak. I haven't heard any of the information coming out from other associations, but if you actually have a read on the ATO website, it does talk about GST turnover. So at this point, until there's clarification from Treasury or the ATO, that's the information we can pass on our membership base.
And of course, there will be more clarity given as we progress through this. That's without a doubt. So, you know, we've got time to work through these matters.
Yeah. So the language is actual GST turnover is the language that's being used on the Treasury website. It doesn't say activity statements, it doesn't say BAS lodgements, it actually says actual GST turnover. So that's the point of reference that we need to use. Do you think there will be an extension of reporting for December given Christmas and New Year? Bar humbug, Lisa, who knows? That's 3 months, 4 months away, so watch this space. Who knows what's going to happen then?
Yeah, I'll speak a tiny bit to that. We have tabled this, not necessarily around BAS stuff, but the consideration for Christmas time in relation to the JobKeeper tests from 3rd of January. You know, as Cass said, you're going to be, you'll understand your actuals for June and September quarters, but then the December quarters and any payroll associated from the 4th of January onwards is, you know, really unfortunate timing for our space. There are no answers to that, but we have tabled what that means for our community.
Yeah. Just out of interest for everybody, I've just dropped the link for the Treasury fact sheet on the payment extension, the JobKeeper 2.0. So I encourage you all to read this document and also to keep track of everything that is released on the Treasury website, because that's the point of reference that we'll always be going back to. If it's on the Treasury website or if it's been released by the ATO, they are the points of reference that we will be using. So I really do encourage everybody to read that and become familiar with it. Elena's asked, so you work out the turnover June plus September 2020 based on June. No, Elena, you look at June 2020 versus June 19, and then you look at September 2020 based versus September 19. So it's not adding the two together in any way. When reporting the monthly actual turnover for a business, should I include the JobKeeper payment received in the estimated JobKeeper? No, JobKeeper payment received, estimated JobKeeper income is not included in the actual turnover to be reported for JobKeeper purposes. Rosalind, no, tax refunds are not part of GST turnover. Back to the hours in February of the 4 weeks based on the pay periods or the date of each pay. It's actually saying it is the 4 weeks prior to the 1st of March. So it's got nothing to do with the pay periods. It's got the physical week. So it doesn't matter what your pay period is. You will be looking at the 4 weeks prior to the 1st of March. If an entity started in August 2019, how would you go for the turnover test? Charles, there are currently alternate tests in place that will support businesses that did commence in August 2019. How those businesses are going to be assessed under JobKeeper 2.0 is still unclear, and we would expect clarification around that coming out with alternative tests. If you have an EBP who was working full-time in their business but not drawing a wage prior to 1st of March, and therefore has no recorded hours work, can they claim the 20 hours rate? The eligible business participant would need to be able to demonstrate the how they've determined their hours. So whether they've got a logbook or a diary entry or, you know, some other evidence of how they've been working in the business. I don't know, but, you know, just because they haven't necessarily recorded a payroll that shows they've worked 20 hours doesn't mean they're not able to be included under the 20 as the 20 hours. I must apologise, everybody. I've been posting links and I've realised I've just been posting them to Rochelle and myself. So I have just reposted. I hadn't posted them to everybody. So I have reposted the Treasury link into the chat box for you. So please have a look at that. And thank you to Kathy Hayward for letting me know that it wasn't appearing. All looked good on my side. Sue Pullets, you're asking the eligibility for the 4 weeks prior to the 1st of March. It's got nothing to do with the payment date. It's how many hours they've worked in the weeks prior to the 1st of March. Doesn't matter when they were paid for it. Desley, if an employee was unpaid leave during those 4 weeks prior to 1 March but used to work 20, are they eligible? Desley, the issue of unpaid leave is something we will need to get clarification on, so we don't have a direct answer for that one at this point in time. Janet's asking, I've got a client that's currently on JobKeeper. He bought a new business in July under the same structure. You would probably need to expand on your question, Janet. Are we talking ABN, new ABNs, different ABNs? I know you've said the same structure, so you know, I'm not quite sure the question you're asking around that. JobKeeper eligibility is as at the 1st of March 2020, so I would start to use that as a test point, and again, that may be one of the complex resolution questions, you know, with that as well. June 19 quarter compared to June 20, and then September 19 to September 20, and if both quarters less, the eligibility is met. Yes, both quarters have to be less, Irene, not just one and not just the other. It is both quarters that need to be less than the 30%, need to be more than a 30% decline to be eligible.
Wow, fantastic.
Yep.
We've gotten to the end of the questions there. Thanks for all of those questions today. And as we've mentioned, we were very cognizant there's a few outstanding items, but there's no point, you know, trying to put the horse before the cart. We just need to be patient and wait for that detail to come out. I mean, I think a lot of what we did in wave one was trying, you know, we were all panicking a little bit, weren't we? And we were trying to share with you what we knew as we knew it. But I'd like to take a more measured approach this time around and actually wait until we've got definitive answers to come to you with. I want the ATO to say, this is exactly how we're going to be doing it. And we've got time on our side this time round. I think we've got the luxury that we don't need to keep firing information at you and making you feel overwhelmed with the information that we're sharing. So just ask you for your patience during this time. Thanks, Eric. He's just advised us all that Premier will be speaking at 3:15 about the industries that will be impacted. So we all 15 minutes to go to our lounge rooms and check out what that means for Victorians. We've got a question here from Robert. If a customer is replaced in receivership or liquidation, is a turnover reported in GST void as a bad debt is incurred?
Robert, I think the answer to that question is a little bit more complex in that generally until you've been advised that you're actually not going to recoup the debt, it's actually not a bad debt. So whilst you may have been notified that a business is in receivership or liquidation, that doesn't necessarily mean that you won't be paid for the services. So that could be a question that needs to be posed more specifically to the ATO. But, you know, as it stands, it is still GST turnover. There is nothing that I've seen that says that a bad debt needs to be excluded from that.
Cass, I brought up that slide so you can talk to that there if you want.
Yeah. So Linda, your question around it is unclear about JobKeeper 2.0 commencing late September 2020 and about top-up. So yes, you're correct. We do have to top up wages each pay run up to the $1,500 for all employees. And yes, for JobKeeper 2.0, there is a two-tier structure that comes in to play. One is based on an employee having worked more than 20 hours per week for the 4 weeks prior to the 1st of March. The other is for employees that work less than 20 hours per week for the 4 weeks prior to the 1st of March. So once you've determined, you know, you'll be looking at your employees and going, okay, is the employee falling into above 20 or below 20 based on what they did prior to the 1st of March? If they're above 20, then they will need to be topped up to the $1,200. If they're below 20, they will need to be topped up to the $750 per fortnight. At that stage, it is that simple. Yep, Linda, I know the calculations are 6 months old. Don't shoot the messenger. Have a chat to the Prime Minister and the Treasurer about that. But it is a two-tier structure, and you'll be using the employee hours back from March to determine the eligibility, or not the eligibility, but the rate of payment that they will be receiving post end of September. So hopefully that's getting clearer. And certainly, as I said, I'd encourage you to be reading the information that is on the Treasury's document. And AAT sent out a newsletter, I think it was Thursday or Friday it went out, Rochelle? Last week?
Must have been Friday, I think, yeah. It was just an information blast on this.
Yeah, that actually goes into some great detail and is really worth reading. And again, it's probably been one of the better assessments that I've read. Tiffany's saying, is the 20 hours an average over the 4 weeks, or they have to make 20 hours per week? Tiffany, it's an average. So you've got an employee who works infrequent hours, so might work, 40 hours one week and 10 hours the next, or 20 hours the next. You would be looking at the average over the 4-week period. Linda, so that means there'll be no top-ups in 2.0? Yes, they will be topped up if they're earning or still on JobKeeper stand-downs. And, particularly Victoria at the moment, the way it's going, there will potentially still be a lot of people that are on or covered by stand-down provisions who are not earning a minimum of $1,200 or a minimum of $750 per fortnight. So there will still be top-ups. Joanne's saying, if you become ineligible, you will need to opt out or just not report anymore. So if you become or are not eligible for JobKeeper 2.0, you are just not eligible. It's not a case of opting out. You will just not be eligible. You'll not have flagged that you've met the eligibility requirements. And Janet's qualifying, same ABN, can he compare last year with this year, even throughout different businesses under the same company structure? Janet, that would potentially be one you would need to look at, probably complex resolution and alternate testing, because certainly the revenue or the turnover from, comparable periods in last year would be significantly different, because you've got a completely new business or company structure or business in place. So yeah, you'd be looking at alternate testing in that situation.
All right, well, we've gone over time, so I think we'll call it a wrap there. And as I've mentioned a few times, you will hear from us over the coming weeks in various formats as we're able to provide you with more information and clarity. And wrap up with stay well, stay safe, Victorian friends, anyone doing it tough, we're all here for you. I'm really proud to be part of this AAT community. We've got some online discussion groups coming up. If you've got other ideas about the sorts of things that we could be doing to share the love and break up the monotony and whatnot, then please, we're really open to any and all ideas.
Thank you.
Thanks for coming along today, Cass. It's much appreciated. Everyone have a wonderful Monday afternoon.
Thanks, everyone. See you later.